Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. We're going to take another look here at Origin Protocol. I looked at this yesterday, of course, and told you to get ready. And I hope you heeded my warnings. I don't know. It's not a warning. It was basically just a heads up, letting you know, hey, this is looking like it's going to continue. And we obviously have that strong push to the upside. So we're going to see how much longer this could continue. But with increased volume and maintaining this volume, that is a very good sign. All right. So if you're new to the channel, not a financial advisor, I love teaching people how to trade. I hope you can learn something here today. We're going to go ahead and look at some pretty important stuff, but I think that something that's also equally important if you're new to the channel, not a financial advisor, but I have a link in the description below for CryptoCache.tech if you want to become a better trader. It's a really amazing community where I help you become better traders. I've got a trading academy. I send out signals for every single trade that I take so you know how to structure your trades and you can follow those if you'd like. And just an amazing community. We've got almost 300 members presently active at this point. It's a really awesome experience. So thank you so much to my current community members for just your continued support, but also just your willingness to want to become better, because that's just the way it goes. And there's a lot to be said, of course, with trading. It takes a while to develop your skill set. So I hope you can learn something. Anyways, enough about that. I'm sorry. Looking here at OGN. Big picture, once again, as I've mentioned before, is getting over that 200-day set moving average. So yesterday, we were getting rejected by the 200-day SMA. You can see that pretty clear as day there. And essentially, today we broke through that so far. Now, granted, this one-day candlestick hasn't closed yet, so it's not a guarantee, but it looks pretty likely we're going to continue to maintain this price point based on the amount of volume that we're seeing here. If you compare this volume to any time in the past, we really haven't seen this much volume from Origin Protocol ever. I mean, there's been a couple of times where the price shot straight up. We had a tremendous amount of volume, and now it's coming up hard and fast, and we're also seeing increased volume. So the bottom line here is that with increased volume in general, it's always an important thing to kind of look at and pay attention to. And why don't we go ahead and acknowledge how much volume we have this year here so far. So we'll just go with 22 as a rough estimate and kind of look. Because right now, and that's actually what's really cool, is that resistance of about 63 cents yesterday that we had as a potential resistance because we closed below that, we're now above it, is right at that same exact point where we have the most amount of volume accumulation this year. So it's a very good sign to see that. If we scroll out and kind of look a little bit further back, big picture, you can see also tremendous amount of volume right at the current price point. So most people are invested between 37 to 67 cents. So anything above that will be profit. So we got to understand that that's a very positive sign. That should work as a support, and we shouldn't expect the price to come down much lower if it were to retrace. Okay, so again, just something to kind of think about, big picture stuff there. Another big picture item here as well, of course, is the 50-day SMA is working concurrent with the trend line, the overall trend here, and that's a very positive thing as well. So is that a guarantee? Is it going to continue to hold? I mean, there's no guarantees in trading, but generally speaking, when you have a trend line that's been tested multiple times, it's more likely to hold and continue to maintain itself. Even right now, Bitcoin is still, even though it's testing, we're still maintaining a trend line in the overall sense of things, making higher lows consistently. And the higher lows is something you want to pay attention to. It's even more important than higher highs. All right, so again, just something to think about there. But big picture here, looking good for Origin. We're also well above 50 on the RSI and not quite to 70 yet either, so we don't have a potential resistance. We may experience some resistance at 72 cents, key level Fibonacci retracement line, but until we get there, I think we're all well and good. Okay. So let's look at the smaller time frames to identify some things here. First of all, let's just go ahead and address the RSI here. Elephant in the room, we have this obvious increase over 70 on the RSI. I don't love to see 70 on the RSI plus, anything over 70 on the 4-hour time frame, because it does spell turnaround in a lot of cases. So again, yesterday we kind of came above and came back down below. Today we're above. I would love it if the price were to come back down and kind of bounce off of 63 cents. Now, we don't always get what we want. So if the price continued to maintain itself, we just need to have increased volume to be able to maintain that price point. The thing we also got to understand too here as well is that we came up to a 9 recently, got a reset down to a 3, and we're back up to a 2. So we do hypothetically have another 24 to 48 hours worth of continuation in the upside. So it's still very strong in that potential. I'm just a little concerned with the RSI being up over 70 because that can essentially push the price action down, but it hasn't proven to do so far, and we have a decent amount of volume all things considered. So if we can continue that volume, we'll be just fine, really. So if we start seeing a very strong taper of volume and the volume comes really low, similar to this weekend, we can expect the selling pressure to increase and the price to go down. Between now and then, I would expect a worst case is 63 cents, because oftentimes when you get your next low, your next higher low essentially, is needing to be higher than the previous high. That's a very common trading skill set, or just not necessarily even a skill set, it's just more so like a common practice to be able to acknowledge that. Because if we do lose, just say 62 cents, or round number 63, then you could potentially see a lower price point, and that lower lows would be broken potentially. Okay. Again, it's not a foolproof thing, but it is definitely something you want to pay attention to. So be mindful of that moving forward. But great news, we're early into this push, and there's a strong chance we'll see a continuation of the upside based on the increased amount of volume. Taking a look at the 1 hour. Let's go ahead and double check this. I love how the price coming up to key level Fibonacci retracement lines and kind of bouncing. We've also got this previous resistance level at 57 cents that's now a support, and it held very strong, very well, even through all the craziness from yesterday. So Bitcoin sold off pretty significant. OGN corrected itself significant, but significant enough to bounce off a key level support. So that's a very, very positive sign. So all in all, very, very good stuff there in that sense. I'm just a little concerned with the overextension here on the 1 hour. You can kind of see that we're getting close to overtime. In other words, we're at a 9 right now, and it keeps wanting to push higher. And if it were to, again, not a terrible thing, but if we go too far outside of this 9 and we start seeing 10, 11, 12, extra candlesticks, so to speak, we can expect some resistance. So I'd be very surprised and shocked to see 73 cents broken today, just based on this little push here. I'd love to, again, don't always get what we want, but I'd love to see a price come down here and balance like that. That'd be perfect. Because it is working itself perfectly within these Fibonacci retracement levels. So I wouldn't be surprised if we see a rejection around 73 cents, come back down, add your position at 63, and then increase from there. That's a strong likelihood, and this is an example of a healthy continuation pattern. I love to see when we have these up over movements instead of this parabolic nonsense that a lot of other people will tell you is a good thing. It isn't good unless you have specific take profit targets in place. Now, those are things I focus on, and those are things that I provide in every one of my signals I send. We have at least 3 profit targets and a trailing stop loss that adjusts as soon as you hit your take profit targets, so you break even if the price were to come back down. It's an amazing, awesome, I wouldn't say it's foolproof, because it definitely has some flaws. Every trading style has its own flaws, but it leads me to about an 80% success rate on average. And I can tell you that is important in cases in point here where we see sharp increases like this and then retracements down to key level Fibonacci. It's just a really cool thing when we see this here. So again, this is very nice. I like to see this type of continuation pattern. Let's quickly double check the cloud. I'm sure we're well above. We've been maintaining this quite nice. In fact, yesterday when I said to add to your position, we were right here around this point here, essentially increasing because we broke through the cloud, back here, used it as a support level, and then continued higher. And you can see it here, even though it didn't hit this here, and it didn't effectively continue upwards with that, it's still maintaining price point above that. Okay, so again, the cloud is an extremely important indicator. Watch my other videos. I have a series or like a playlist for some of my important indicators that I use day in and day out, how to set them up as well. And the cloud is something you want to familiarize yourself with because it really helps us understand where we're at. In other words, we are free and clear of any price action here. Conversion lines above the baseline. We're well above the cloud. Awesome stuff. We're going to continue to maintain this upward momentum until we break that. So until we come below this cloud and or conversion lines below the baseline and the lagging span intersection of the price action, there's a handful of things. It's a great indicator. It gives you it's an indicator that has 3 indications in one that really helps you understand the overall sentiment of the time frame that you're in. It works best, in my opinion, on the 1 hour chart, but that's just because it fits my trading style. The 4 hour time frame also works very well. Anyways, that being said, that's kind of where we're at there. So very, very good stuff here. I see nothing that's disadvantageous. No reason we're going to see a strong pullback below 63 cents. If we do see a pullback to 63, add your position at 63 because it will likely increase again from there. I hope it happens to essentially come back down and back up, because then it gives us a lower price point, but it continues this healthy pattern. And right now, the truth be told, we are a bit on the overextended side on the 1 hour. We're at a 9 on TD sequential, so a pullback is necessary. But one last thing to kind of look at is on the 15-minute time frame, we can see we broke out, say, the standard deviation lines. So even though we do have increased volume, with the price being held in place with that standard deviation, it's actually very healthy in a lot of ways, but it could also lead to the price coming back down. But what's great is the volume weighted average price point right now, the average price for the volume is at 63 cents. That's exactly right with our support level. So if the price does come back down, we'll see it bounce off the VWAP as well. Okay, so again, a lot of good stuff that you can kind of see here from OGN. There's literally no downside. I would just expect a slight pullback perhaps, or just a correction, so to speak, but nothing significant to reset everything. Unless we drop below 63 cents, we'll have a different conversation then. But until we continue to we're maintaining these higher lows and essentially a nice continuation, there's really no reason why this is going to slow down. And OGN's proven to do very, very well when it has high volume. Okay, so again, this is what happens when you have high volume, and we're starting to see that here. Okay, so I do recommend consideration of at least a swing trade on OGN. I think it's definitely a good call, and consider adding to your position if you have one already, because I do not think it's done yet. I think we're going to be able to match its most recent high in March of 85 cents and then some. I think that's very likely. All right, so all things are good here for OGN. I hope you learned something here, of course, today. Thanks again for joining me. And if you're not currently a community member, CryptoCache.tech is a site. Link in the description below. We'll look forward to getting to know you better. Have a good rest of your day. Thanks again for your time.